Hey, welcome back to Terminology Tuesdays, where we go over one personal finance term every Tuesday, or almost every Tuesday. What is today's term? As you already know by the title, the term is 401k match. Where do you see it? You typically see this used whenever you're looking at the benefits of your current job or potentially a job offer at your next job. In my experience, it's not something that people talk about a whole lot. It gets brought up like once a year and then shoved under the rug, but it's a great thing to know what it means. 401k match is the money that your employer sends to your 401k account that matches the amount that you send. Normally, this is set up as a percentage of your income. So it's not like a dollar amount like $100 or $200. Typically it's something like 3 or 5 or 6% of your income. So if you want to get the full match, then make sure and tell your HR person or whoever kind of handles the money and the 401k stuff to send at least that percentage to your 401k. Depending on how it's set up, that means that your company will match some or all of that same exact percentage that you sent and will give you that money in the form of a deposit into your 401k. To be clear, this isn't money that like you get in your paycheck. It's not money that you get so that you can take it and spend it. It gets sent directly to your investing account. And if you wanted that money, you would have to end up paying tax and penalties to withdraw the money early. So it really is an incentive for you to save and invest. And in talking about this, I'm actively trying to hold back my excitement because this is such a good thing. Sometimes it can feel a little bit confusing, so we'll get into those other factors now so that you can understand them. For example, in my current job, our 401k match is 6% of our pay, but it's not the full 6%, it's a 50% match of 6%. At first, this seems a little bit confusing. Wait, I have to send 6% of my pay to my 401k for you to match 6%, but then I only get 3%? Why don't I just send 3%? I think there could be a couple of reasons why it's structured this way, how these companies will set it up with just a portion of a percentage. For one thing, if your company actually matched 100% of 6% of your pay, or all of the 6% that you put in, like that's actually a lot of money. And depending on the employees and your pay and stuff, like that could be something that's just straight not affordable for your company to be able to do. But it would be really awesome, and it's not impossible. I have seen matches that are that high. So if that is you, get on it and get that match. The second reason why companies might set it up this way, where it's like 50% of 5% or 50% of 6%, is just an incentive for you to save more. Because if you only ever save 3% of your pay towards your retirement, even if you get a full company match on that 3%, it's probably not going to be enough for you to retire on. So to set it up this way, where you have to put in 6% for them to give you 3%, you end up contributing more money, you end up saving more for retirement, and it helps you overall in the future, even though it's a little annoying. But it's worth it. And in a similar thought pattern, if they really wanted to incentivize us, they could do that same thing, but on an even bigger scale. So they could say that they'll match 30% of what we contribute if we send in 10% of our pay. So we have to put in a full 10%. They match just 30% of that, which is the same 3% for them. I mean, they're not spending any more money that way, but they've dangled that carrot out even further to where we have to send a full 10%. They could kind of force us to save more if we really wanted to get all the free money. So the way it is for me and a lot of people, where you get this partial match, it's kind of a happy medium in between the two. And if in listening to this, you weren't sure what I meant whenever I said contribution, or if I say something like required minimum distribution, you should go back and watch previous Terminology Tuesdays videos to find out what those terms mean. Let's keep going. Another detail of how 401ks work that's important to understand is vesting. And no, I don't mean a kind of sleeveless puffy jacket that makes you look cool in wintertime. I mean a totally different financial term. Now this could be its own Terminology Tuesdays video, but I'll get into it deep enough that you can understand and keep going with your train of thought with your 401k. Vesting in this arena is all about a waiting period before you get your money. In my experience, a vesting period is typically 1 to 5 years where you're waiting to get the full value of this money that you've been promised. Now, vesting periods can sometimes apply to things like stock options, but in this case, we'll focus on 401k matches. Unlike a 401k match that's an incentive for you to save more, vesting is an incentive for you to not quit. So if you have to wait around 1 or 3 or 5 years to get this free money, well, you're probably less likely to quit that way. So it's a way for the company to kind of keep a hook in you. It's kind of a gross way to describe that. In my own personal experience in employers in the past, we had a vesting period of 5 years. Of course, I set up my paycheck to maximize the full 401k match, so I was getting as much free money as possible. But what would happen is that money wouldn't necessarily be mine yet. It would be in the account, it'd show up like on paper, but it wouldn't be a vested balance. It would show a difference between a vested balance and an unvested balance. For me, the first year, I didn't get any company match whatsoever. Then after that first year, a 20% amount hit my account. So it was a fifth of the total 401k match I was due, got deposited and became part of that vested balance. Then every year after that, I got 20% more. So I was at 20%, 40%, 60%, 80%. And after 5 years of service, I finally was 100% vested and I was given all the money that I had essentially been promised. In those first 5 years, leaving did cross my mind, but I knew that if I left, I'd be leaving all that money on the table. And so it did actually incentivize me to stick around. I'm still there, by the way, but it was a thought that crossed my mind. As of last April, I became fully vested. That last chunk of money, whatever it was, I don't remember the exact amount, hit my account, and now I'm fully vested. So if I left tomorrow, I would take all of that money with me. Since then, we switched to a program that essentially has no vesting period, so it's 100% vested immediately. So if you're looking at your own documentation for your job and it says something like 100% vested or 0 vesting period, that means that as soon as you get that match, it's yours. This is the best possible scenario for an employee in my mind. And if your company is set up this way, be thankful because that money is yours instantly, gives you all the options and all the freedom. So should you do a 401k match? As far as I know, there are a few other options that just straight up give you free money. And if you don't like getting extra money for free, then you must already be financially independent, and congratulations. No, but seriously, I think unless you have genuinely extreme circumstances that are demanding 100% of your paycheck, every last penny, then you really should make room in your budget and in your lifestyle to invest at least the amount that you need to get the full employer match. It's just too good to pass up. But this video is for entertainment purposes only, so don't take my word for it. If this video was a little bit helpful, if you picked up anything new that you didn't know before, there'll be a box that appears here next to me for you to click on and see an entire Terminology Tuesdays playlist. As of right now, there are very few videos in there, but in the future, it will be absolutely full. So if you're watching this in 2022 or 2023, there'll just be a grip of videos in there for you so you can learn all these terms really quickly. Thanks so much for being here, and I'll see you next time. Bye.